I think a couple of things. First off, you've got your 10-year yield high since 2011. We've had a solid run-up as far as that US dollar index. But don't forget that the S&P is up 30% since the January 2017 inauguration of President Trump. So, markets get ahead of themselves. We're going to take that on board, and you can't marry trades. You've also got to understand another thing, where you've got the VIX up 44%, a huge jump from the best part of 16 to 23. So that gives us an indication that they're certainly creating far greater volatility than probably everyone anticipated. Japan's down 4% for the morning, and it's been a very, very, I think, mixed emotion sort of day. Hard to come up with an actual answer why, but certainly if you look at all the contributors, there's enough there to give us an indication there's probably further to fall tonight.
Peter, normally a stock market sell-off sets off a buying spree in treasuries as investors look for security in a more steady government debt market. This time around, in Wednesday's sharp plunge in stocks was actually happening because investors have been selling long-dated treasuries. So clearly there is no flight to safety in bonds. This is a clear sea of change that U.S. equity markets are witnessing. Do you believe that this unusual trade could be a warning that there will be a lot more stock market selling ahead? Is this a concern for you?
Yes, it certainly is. I think that you've summarised it very, very well, and there's not much more to add to that, other than you've seen a very strong US dollar. You've also got to take on board President Trump and, of course, the trade issues and tariffs and so on, and I really think that'll work through the market this quarter and moving forward over the next, 3 to 4 quarters. And I think that creates uncertainty, which in turn is the volatility of the nervousness. IMF's reports coming out earlier in the week weren't glowing, on a global front. And there are just so many moving parts that really haven't got a confidence underpinning them. And that's creating that sort of, situation in the markets. I mean, that traders are dumping stocks. We've seen that with the VIX, and that really gives us a good indication. And you might see a little bit of a flight to safety, dollar, and, of course, possibly even gold going forward.
Right. Peter, good morning. This is Hiral on this side. Now, overall, if you go to see the kind of up move that we'd seen in the US markets was mainly led by the technology stocks. And that is what is getting the markets lower. Do you think this correction was something that was long awaited by the markets and that's one of the major reasons? Or do you think there is fundamentally something that's going wrong?
Well, I think possibly they were overbought. There's no doubting that. I mean, when you're having a look at the technology sector and, the big caps, the likes of the Google, the Alphabets, Amazon, Facebook and friends, all of that sort of thing, they've really had a very solid uptick over the last, 12 to 18 months. It's been, one-way traffic. That NASDAQ sitting at around about 7,000. So taking that on board, you've still had a very strong move considering other indexes for the greater part of that, 2-year and 2.5-year period. So, like any market, they become ahead of themselves and probably a fair degree of profit-taking. And it's just a little bit of a wait and see. But I feel as though that if you're looking, down the pipe a year ago, you would have been seeing a NASDAQ sitting at 6,000. It had a high of 7,700. It's sitting there at 7,050 at the moment. It's still a fairly strong move to the upside over that period of time, and there may be more consolidation to the downside over the next, week or so.
Peter, do you feel like there's a change in leadership coming? The Dow, the NASDAQ and the S&P 500, like you indicated, have had a very strong 2018. In the meantime, Asian markets, emerging markets seem to have entered a bear territory. Most of those markets, including India, are in a sort of oversold territory. Do you feel like the next couple of months, as we approach the year end, there could be a shift of trade where U.S. equity markets may see some weakness, while Asian emerging markets may see some buying coming in on weaker emerging market currencies and, of course, compelling valuations?
Well, certainly as far as emerging markets, I mean, they've had a very tough, 3 to 4 months. If you look at even the Japan market, I mean, don't kid ourselves, we're at 27-year highs. I know it's come off a fair bit. It's off 4% today, and it's had a bit of a washout over the last week or so. but you can't get away from those numbers. We're not sitting at a 15,000, Nico. You're sitting well into the 20,000s, and it's been very, very solid. So whilst we take on board those very strong economies, being the Japans, the US, I think a lot of those emerging markets will probably take a little bit of wind behind them at the moment, and they'll probably turn around over the next 3 to 4 weeks. I wouldn't be surprised to see a little bit further uptick there, and possibly a consolidation phase across the big markets being US and of course Japan.
Right. Peter, overall, if you see with regards to the treasury markets as well, US has almost around $30 billion worth of debt auctions, which are lined up during the week. Now, overall, probably the 10-year bond auctions drew the highest yield since 2011. With all of this said and done, where do you see the bond yields moving? And if you see the US economy as well, the unemployment levels are pretty low right now. So are rising bond yields the major concern as well?
Well, yes, they are, and there's no doubting that. You've also got a president sitting on the other side who said in the last 24 to 36 hours that he feels as though the Fed's been too aggressive as far as interest rate rising. So that needs to be also considered. In the short to medium term, I wouldn't be surprised to see that those yields continue, the 10-year, to possibly tick higher from here. I take on board those highest since 2011, and that'll continue. There's still. Overall, the US is performing incredibly well. Look at the unemployment numbers. Have a look fundamentally as far as exports, and take on board also the strength of the dollar. An outlier there is possibly crude prices and what impact that's going to have to the man on the street and woman on the street as far as purchasing power. But at the present, it's still not a bad economy. Any economy is up 30% in the best part of 22 months as far as the stock market. Anyone would be, congratulating it all the way home. So I think it's just having a little bit of a correction, and that's, a lot of people say that's the time to buy.
Iran crude export numbers are falling much faster than most of us expected ahead of those US sanctions on the country's oil sector on the 4th of November. Do you believe $100 a barrel could be a reality on crude prices? So while I know that the drop is taking place at a fast pace, inventories elsewhere are building up even faster, including production from OPEC and non-OPEC members. What is the outlook on crude? Do you think the current decline will be stalled on back of production concerns? Or do you really believe that $100 a barrel could be a reality over the next couple of months?
Well, first off, I think, let's put our mind back. You're up the best part of nearly 50%. We've had a low there of $51, over the last year, and we've had highs of 77 for WTI and put another $10 on for Brent. The consideration there is, as far as OPEC, they are very happy with these sort of prices. Their next major meeting is the 3rd of December in Vienna. I'll be there. And I'm absolutely sure, as far as the Iran situation, and you've got Venezuela, all of those contributors, and what's happening as far as the hurricanes in the Gulf, one of the worst on history, if we have further outages there on the production side in the US out of the Gulf, then that's going to force pricing higher as well. And I think it could be a very, very strong move over the next couple of weeks for crude, up a couple of dollars, very conceivable. So I think the big picture is you're going to be paying higher for energy, not lower for energy, and the producers are getting another run because they're getting paid in a stronger US dollar. So it's very much a win for them also.
Peter, it was yesterday that the Indian government, or rather on the weekend actually, the Indian government announced that they would not comply with US demands to bring Iranian crude imports to zero, implying that they're expecting to get a waiver. Our year-on-year imports from Iran have actually been increasing due to a part of massive discounts being offered by Tehran right now. Do you think this could sort of impact that equation that currently is at play and, of course, playing in support of crude prices? Where do you think this is going to keep India and Iran imports at?
I'll tell you what, that's going to be a very interesting geopolitical concern because I'm sure that President Trump has a different issue on that or a different mindset. And it'll be quite fascinating what the White House says about these sort of actions, is what India is doing. But, you know, it's a hard one to speculate on, but it just causes, again, more confusion to the market. And leading over the next couple of weeks, no doubt Iran needs to bolster up its economy, where it doesn't want to see a return to 2014 of what happened there and decimated its whole currency and, of course, its economy. So, you know, it's a little bit of a wait and see, but it's going to be very, very interesting how that plays out over the next matter of weeks, and again leading into OPEC meetings. So I'm not sure where the US sits on that. I'm not sure where India sits on the whole big picture, and it creates, as I said, you know, more confusion for the market, and again, I think that'll be tabled in probably volatility.
Peter, now we come to the all-important question about what's going on with the dollar and what's going on with emerging market currencies. The last couple of months have been rough, to say the least. What is the outlook on the dollar index, especially after Trump having a go at the Federal Reserve for hiking interest rates too quickly? I'm assuming that's a dollar negative, even though all of this is just talk. Also, what is the call coming on the Indian rupee? There's been massive selling on the local currency pair here. We are back down to 74.5, record lows. The NDF market this morning is indicating another gap down for the dollar rupee. But and I guess as long as crude remains elevated, the rupee will continue to remain under pressure. So quick word on the dollar index. What is the outlook there? And also, what's the call coming in on the dollar rupee pair? What's the trading range that we are looking at?
Well, first off, I think the index is going to be a 94 to 96.5 handle, US dollar index. I think it'll oscillate between there. It'll be a little bit of a whipsaw because you've got President Trump saying as far as the Fed. Also, you've got, you know, the safety. If you see the markets as far as equities wash out, I think there'll be a return to dollar. Then the other side is what happens as far as Indian rupee. I remember saying on TV we're going to see a 72, 73 handle. There were gasps on the other side. Now I think it's probably got the potential to take a 75 number out of there. And there seems to be, you know, a continued weakness over, and I think that'll continue over the next matter of weeks until there's actually a floor found. And it's going to be hard for a lot of these emerging markets to compete strongly from a currency pair situation against the US dollar. Also, we've got to take on board what's happening with the euro. So, you know, as far as US-Indian pair, I think possibly, you know, a 75 and a half number. It'll be hard to say whether we're going to see 76, but I think that 75 is going to be very much there.
Right, 75 seems to be very much there. Do you think that's where the rupee is going to be bottoming out? Peter, is that the outlook you have on the currency pair till the end of the year, maybe?
Samina, I'll be seeing you hopefully in a couple of weeks, about a month and a bit in Mumbai, and I tell you what, I wouldn't be surprised we're sitting at 75.5 to 76 by then. So there you go.